such a good play.
Really?
Yeah.
We're going to look at like the fundamentals and the quant data for it, right?
Yeah. It's like, it's
Going live, by
Guild
the
all
way.
over again. It's Guild all over again.
Oh, is it Guild all over again?
All over again. But like, really, like, you're going to see. You're going to see.
Man, this is going to be good then.
Mm-hmm.
Okay, we're live right now. I'm just setting up our thing here, but you can pretty much get started just talking about the company.
Yeah.
What's going on, everyone?
How's everyone doing today? Tuesday morning, or is it Thursday? I don't even know anymore.
I don't know, man.
Just,
every day's the same, except
every day
markets are closed on weekends. Which, if there was markets open on the weekend, I don't think I would know what day it is ever. Goddamn quarantine.
And hey, we got a long weekend coming up this weekend.
For what?
Yeah.
Great. Let me go get my swimsuit. We'll head to the beach. Why does this matter?
I didn't even think about that. You're right. Like, what are we gonna do with this?
Is it May 2-4 this weekend? Yeah, I don't even know.
What are we doing with this extra day? Like, it's just another day. Just another day in the prison. Yeah, so we got a long weekend. But guys, Tuesday morning, big news on NVAX. We're going to be looking over NVAX today. There is a trade here, but it is a ballsy trade, right? And I think that's why we're going to be getting paid for this. So NVAX, company secured. Let me head over to Google. Okay. Company secured $384 million in funding for the COVID vaccine. Okay. Funding is so important for these biotech companies because they burn cash like crazy. Right? Until they find a product that actually can go to the public, they're burning cash to get there. And so by them securing this, $385 million basically line of credit, it really helps them stay in the game. Right? So it's pretty wild to see too. You see last night, so let me just move this photo over here. So I'm in Thinkorswim here, guys. So you can see. Look at this. Yesterday, Sean, do you see that? It's like it drove up like 30% ahead of the news. For anyone that says insider trading isn't real, I don't know what else to tell you guys here, right? It drove up right ahead of the big news today, and so the stock's up 50% or 60%, and options are so expensive right now. Okay, they're crazy expensive. I was here on the option chain, and the implied volatility for the at the money options expiring in 3 days is 250%. Okay, earlier this morning, this straddle was going for $8.80. Now it's $7.90. I mean, it's still pretty expensive. But what's happening is, guys, is the market is still expecting a massive move over the next 3 days. But we need to think a little deeper here, right? What happened? So they secured the funding. So what is going to come out in the next 3 days? Right? Yeah. There's probably no news. The news is they got the funding. And now they're going to continue their research towards finding a cure for coronavirus.
Exactly.
But these next 3 days are going to be pretty boring. So you can sell the volatility here. Remember, what we find, and this is just a bias in that we have as humans, is that when something moves, we want to jump on the train, right? We want to be either riding the wave and buy the stocks, or it gets all the attention. So everyone starts piling in for the options, for example, on NVAX, right? We see, I was on FinViz, it has the highest volume out of all the equities today. So keep that in mind. It's like everyone is there trading this thing right now, but the news is already out. So what is left to come, right? And as an option trader, volatility trader, we can say, well, there's probably not going to be any more news the next 3 days. So why don't we sell this overpriced options? And that is what we're doing. We're selling these. Let me show you what it looks like. So here's the straddle, right? We're selling this straddle. Now, the risky thing is that you can't buy the wings. Okay, there's no wings to buy on this thing. The highest strike is 40. So you are taking that massive upside risk, of something huge happening. And that's why we're getting paid, right? That's another, because no one is coming in. So you have all this demand coming into the market and nobody is providing that liquidity. No one is saying, sure, I'll sell you some options, right? So you're having this massive imbalance here. And so this leaves an opportunity for vol traders to come in and say, okay, you know what? I'm going to trade small, but I'm going to place the trade. And you basically, as long as it stays in the range of 47 and 31, we're going to make money, right? So let me move this here.
What's it trading at right now? Like 39?
Yeah, 39, right? So 40 has to go to 47 for you just to start losing money in the next 3 days, right? Like this is absurd. And we obviously know the reason why, right? And you can see here, so on my Thinker swim graph, what I have a couple cool things here. So the blue is the market implied move going forward. Where does the market think the stock is going to be in the next 30 days? And what we can see here is before this, so it looks like we had earnings yesterday and definitely some insider information going on. And then we had the big news today. So if we take out those 2 days, you can see that on average, the stock only moves 3 or 4% a day, right? Which is so small compared to the stock market thinking, it should be a $9 range.
Yeah.
Over the next 3 days, right? That's 20%.
Yeah, it doesn't do that.
It doesn't do that. So, you have to think like, well, there's no earnings coming out. There's probably going to be no new news coming out. So we're probably going to go back to those 3, 4, 5% days. And for that reason, you want to be selling options here.
Yeah. The big move from the funding has already come out.
Exactly.
So, yeah. So yeah, do you want to take a little bit of a deeper look here, Jordan?
Yeah, we can go on the terminal as well. And just to reiterate, guys, it's like the reason why we're getting paid here, okay, is because nobody wants to sell options. The thing just moved 70%. Even for me personally, I was like, okay, I'm gonna have to go into this position really small. And, and I was still nervous because I know that there could be something that happens, right? And I get blown out. So keep that in mind, right? This is why we're getting paid. No, there's all this demand.
No supply.
No supply.
So it drives up the price.
Drives up the price. Exactly. So let's go check it out. NVAX. Okay. So you can see here, right? The implied volatility for the 10-day option is wild, right? It's all the way up here. Okay. And if you factor out, the non-earnings days and this big move, realized volatility is really low.
Yeah, which means that like the amount that's actually been moving is not that much.
Yeah, it moves on news, which makes sense. Like the market cap is like, I think $1 billion. So this thing just got 33% of its market cap in funding.
That's crazy.
Of course, it's going to move the stock, right? And so these guys have basically a long lifeline now. And so they can really work towards creating this cure. So it's pretty fascinating to see how the options are reacting here. Is there any questions on this, Sean?
No, so far so good. So far, everyone's just watching.
They're blown away.
Yeah.
They're all placing.
Guys, if you have any questions about this, by the way, do leave them in the comments there. We will address every question.
Yeah. Yeah. And you guys can see like the relative action here, like everyone is trading this. You can see it right here, right?
Mm-hmm.
It's like one of the highest in the whole equities market. And we just said like, no one's selling volatility, right? So you have this huge demand supply imbalance here.
Yeah. Look at the demand for the calls. If you look at the CU.
Yeah, it's crazy.
We have crazy demand for the call options and the out of the money puts, right? So on both sides, but we have even more on the call side, which is crazy. You do see that when events like this happen. But what we really look for there is they're overpriced, right? So the more up on that chart it is in the bottom left, the more overpriced it is.
Yeah. So
right? We understand why it's overpriced, right? They just came out with this massive news. Of course it's going to be overpriced. But, is it going to continue moving that much? Well, where's the next surprise going to come from? Right? If there's no more surprise, well, then we can pretty comfortably sell it.
So yeah, so see, like message volume is up like crazy, right? We're up 230 already, just already, right? And let's see what the sentiment is here. Everyone is bullish, right? All the retail traders are bullish. So just like think about that, right? You have all these people coming into the market, and they're all buying these call options, right? So it's driving up the price of the calls. There's nobody selling the calls. That's going to make a huge imbalance in the market. And it's so funny to see that when like after the news, after the fact happens, retail traders pile in.
Exactly. I think because it draws attention, right?
It draws attention, yeah. And like if your friend's trading it, then all of a sudden I'm looking at it. And like think about this as well. Like we are, talking about it. Other people are going to go look at it. It's going to drive up the volume even more.
Exactly.
It's amazing to see how like everyone starts crowding together, but you want to find yourself on the other side most of the time when you're selling or buying volatility. Cool.
So do you want to show how you'd structure a trade for this? I think it makes pretty good sense, like why we would trade this. So how would you structure it, and what would you be looking for your entries and exits?
Yeah. So I would probably sell the. So I'd be doing the 39 strike here. So here it is, right? So this is the position I would put on, right? I'm selling the $39 strike straddle for $8.05. And as time goes by, okay, you're going to make money, assuming that it doesn't move too much. If it moves too much, then your gamma losses are going to outweigh your theta gains, right? You're going to make more money you're going to make less money on time decay than you are from actually paying out for big moves. So I think that it's going to move a lot less than what the market's implying. And so you can sell this for $8.05. We can't buy the wings. There's no 50 strike. There's no 60 strike. Okay. And if there was, they'd be way overpriced anyways. So you have to do this naked. And you have to understand that, this thing could move. This thing could really move and really hurt you. But the odds are definitely in our favor here. It's worth the trade. It's a positive expected value trade. I think it's a fantastic trade. That would be probably the only trade idea I would do on this thing.
Yeah, there's nothing else really, right? Like it's like, look, if you do think it's going to go up, we're not saying that you can't bet on this thing going up, but what we are saying is if you're going to use the options as a way to trade this thing, you need to be careful because the premiums are extremely expensive right now. Right? That's really what we're analyzing here, right? When the game has never changed, right? Trading has always been the same. It's buy cheap, sell expensive. Right? Buy low, sell high. And in the option space, it gets really cool because you can do so many different things with it. But at the end of the day, we're evaluating the price of these options, right? If they're cheap, we want to be buying them. If they're expensive, we want to be selling them. And what we're seeing here is they're extremely expensive. So we want to be selling them. But given the volatility of the stock right now and what just happened, we don't necessarily just want to sell to the upside or sell to the downside. So we sell a straddle. So now we don't have a view on what direction it goes. All we care about is how much is it going to move. Are we going to collect more premium than we're going to have to pay out for the stock moving? And our answer in this is that we believe that we're going to collect more premium because it's just so high, right? There's only a couple days till expiry, and the market's expecting this massive move, meaning the options are priced as if there's going to be this massive move.
What's actually
that's why we're structuring the trade this way.
What's actually a really good trade right now? I think it's actually a better trade.
What?
Do a calendar spread. So
yeah.
So buy the June 39 calls, sell the May 39 calls. So this is what the trade looks like. Okay, and our theory is that we're going to make more money on the front month implied volatility than we are in the back. Then we're going to lose in the back month implied volatility. So I think this is a great trade to put on actually right now.
Yeah, these get a little more complex to really structure, but like since we're breaking it down here, you could just follow this. Jordan, when would they close this out?
I would hold this for probably till Thursday.
Till Thursday, and then just close it out.
Yeah, just take it. Like if it's still over in the middle of your price here, then keep holding it. Otherwise, yeah, dump it.
Yeah, and this should be a good profit, man. This is a really good trade.
Yeah, this is a really, really good trade here.
Yeah, so we just had a new person tune in here. So this live is going to be recorded, by the way. We just broke down everything to do with NVAX. They came out with a bunch of news recently. It makes a lot of sense to sell volatility here. We broke down exactly why. We broke down the exact trade that we're going to be taking. And when we close out this position, I'll make a post on my Instagram or a video here about the trade that we made. Just breaking it down so you guys can see exactly how we went start to finish. But yeah, in this video, we broke it down. It makes a lot of sense. There's a really good play here, not to short the direction of the stock, but to short how much it's going to move. And that's really what the option chain is used for. It's used to take a view on how much something is going to move, not just what direction.
All set.
So Carlo was saying for the calendar spread, buy June 39 calls, sell, or buy May 39 calls. No, buy June 39 calls, sell May 39 calls.
Is that our buddy Carlo?
Yeah.
Oh, no way. What's up, man?
Yeah, Carlo's tuned in, man.
Yeah, Carlo. So that would be the trade. Sell the May 39 calls, buy the June 39 calls. And it should be trading for $3.90.
And do you want to and you just want to do those one for one?
Yeah, just one for one, Carlo.
Perfect. Yeah, Carlo, let's throw that on and then we'll manage that trade together in the group.
Yeah. I know. Yeah. It's gonna be great. That's gonna be a fantastic trade.
Yeah, no, I'm excited to see how that one plays out. Perfect. Carlo, you got any questions for us we can go over for you here? Yeah, that's really cool, man. And what do you guys think of this new layout, right? We normally spend a lot of time in our predicting alpha terminal breaking down things, but we're moving over to Thinkorswim to show you guys some of the tools that you can directly access yourself right now. A few of the ideas, a few of the things that we look at, the way we have our Thinkorswim set up for volatility trading. Let me know what you guys think of this layout. And if you want a guide on how to set up this layout, we'll make a video on it for you guys.
Yeah, and just to quickly go over it, we got the RSI of the implied volatility down here. We have the implied and realized volatility. We have the daily percent change in the stock. We have the stock price, and then we have the market's implied move forecast.
Perfect.
Yeah.
Okay, guys. So yeah, that's the live. I'm going to be posting it up right after this. If you're just tuning in now, we broke down NVAX. It's a really good trade idea. This is the exact trade idea you should consider taking yourself. If you're an options trader around NVAX, it makes a lot of sense to do. And you'll find what we did in this. This is what happens every time we break down a trade for a company that just had major news, right? Unless there's a reason why we think it will actually continue having drastic moves, such as if there's a lot of uncertainty around the news that came out, it almost always makes sense to sell volatility, especially if it attracts a lot of retail eyes. So if a lot of people come in and are hopping in after the news, that's a good sign that we want to be providing liquidity, because when you have a big move like this, the stock moves 70%. Nobody wants to be selling options here because they're fearful, right? So this creates opportunity for people who can do a little more research and are willing to take on a little more risk to come in and make some big bucks. Okay, guys. So I think that's going to wrap it. That's going to be it for this live. I'll probably make another video breaking this down again after a little summary. So if you guys have any questions, shoot me an email at sean@predictingalpha.com or send me a message on Instagram @predictingalpha. Love talking about this stuff. We'll get back to you, help you through any ideas you have. But until next time, we'll be back tomorrow morning, 10:30 a.m. every day. So if you haven't already subscribed, make sure to subscribe, and we'll see you next week.